haven't seen the price effect yet of this oil shortage that the world has because of a delay, but that delay is coming to an end.
Ladies and gentlemen, Investor Talk is back, and after 2 months, Egon von Greyerz is also back. Egon, great to see you. The disaster that we were expecting is unfolding. People are lulled into false sense of security by soccer games, and the stock market remains ridiculously overvalued, but the drama that we expect is unstoppable. It's great that you are here again. Let's wake up some more people, right?
Yes, well, good to see you, Jan. And as you said, we've had the summer is here, but the World Cup, of course, is a big thing because it's like now America's taken over the European football or soccer, as they call it. But even the final game, and especially watching Argentina, it does show that the decadence is also in the football. I mean, the dirty part of the game was massive. The number of attacks, and I would say, because I've seen a lot of clips also that Argentina were the worst, sadly. But it's just it's not a sport anymore. It's a fight all the time, and that reflects the world. There's not chivalry. There's nothing polite anymore about sport. It's a game with a lot of money, and it's like a matadors, and of course Trump had to be there in the middle of the prize giving and be in the way of everybody. But anyway, yes. But part of the games were good, and Spain was a very good team and a worthy winner, I would say. So yeah, it's great fun to watch anyway. Some of it.
A worthy winner, Egon, that's true.
Absolutely.
Indeed, yes.
They play the best, most entertaining football, and that's what counts. And that was really nice to see.
People need some bread and circuses, as from previous times. We know that.
Yeah.
Egon, let's begin with a joke from the USA. I call it a joke, although Financial Secretary Bessent, I think he didn't mean this as a joke. We know that there was a lot of talks about Fort Knox and checking the gold deposits there. And now Bessent is simply claiming that the gold is there, worth over $1 trillion. Not a word about a new audit. We remember what Musk wanted to do. Shouldn't that make us even more suspicious than before? There is no intention at all for an audit.
Yeah, every new president, every secretary of the Treasury has gone to Fort Knox, knocked on the door, looked in for 5 minutes and said, yeah, the gold is there. And every time they have promised that they would do an audit. But of course, they all know that the gold isn't there. I mean, it's not the full 8,000 tons there. It's part of it. But nevertheless, I don't think the gold is there. I don't think the US has 8,000 tons at all. I think they've either lost it all in bad financial transactions, or they've lent it out and they don't own it anymore. So I think what they really have is a lot less. Because if they had more, as you say, then of course they would be totally prepared to have an audit, but they won't. That's why I think they can never revalue the gold either, the US, because the US, if they said we'll revalue gold to 20,000, China would laugh and say, well, show us your hand. And they could never do that. So
I agree, Egon. When we talked last time and before, I figured the Americans would want to host the World Cup first and then start the Iran war again. And it looks that exactly this is now happening. The war is escalating again. And while this happens, the debt skyrockets. Only to give to our audience some hard numbers, I looked here at the fiscal data of the Treasury. The link will be in the description as always. When we talked the last time, the debt was at 39.2 trillion, and right now, a few days back, where I had the last number from, it was at 39.58. So they added in less than 2 months, Egon, $374 billion in debt, which equals, what a coincidence, the whole annual gold production of the world. As we previously said, Egon, because the correction in the gold and the precious metals is now lasting already for a couple of months, that might be, once this is over, a rare or even the last opportunity before the next big leg up starts.
You know that people love buying high and selling low, sadly. So everybody bought in January, leading up to January when gold went up. And now, when we have a real opportunity, if you don't have enough gold or silver, you have a real opportunity to buy gold at very good prices. And I think this price will not be seen again forever, probably. And I mean, this is the time to buy because this correction has been longer than I expected. I admit that. But nevertheless, it's more or less finished, this correction, and it could be finished here and now. So this is the time to again buy gold and buy silver with both hands and just sit on it because, yeah, as we have discussed, the potential here is not just small profits. It's that gold and silver goes up by multiples, many times in the next few years. And that's what people should prepare for now, before it's too late.
Egon, the people were celebrating their fantasy land, not just at the stock market, but also with the soccer, with the football games. And I found a very interesting graph in one article by your colleague, Alistair MacLeod, whom I recorded last month's interview. And that was a very striking correlation between stock markets and interests or yields. Let me show it first. I would expect big movements very close ahead. Here we see the article, Egon, 10-year treasury
Yes.
yield, log scale. So we are here in this triangle, Hormuz shock. We come to this in a moment, but now let's look what he drew from this. And this is the reversed yield versus the stock market. And my goodness, we saw this previous gap, the dot-com bubble, and now it's much worse. So this has to come together. And how can it happen? Because we think the interest will go even higher, so it will continue here. So the stocks must correct. I think it's really overdue.
Yes, as you know, I mean, I've been saying since the last few years, since 2020, 21, that interest rates have bottomed, and we're now in a long-term uptrend of interest rates to, I think, levels that we saw in the 1970s at least, which is the high teens and possibly higher, because it's very easy with the debt exploding, and you showed before how the debt is now virtually 40 trillion in the US. I have a chart which I often show that every 8 years, every two president terms, US debt doubles, and it has done for decades or longer, and therefore now debts are going to go up exponentially, and interest rates will have to also go up in order to finance these debts, and we will have high inflation. And of course, the other side of that is that we have a bubble stock market, which has been thriving on the cheap debt initially, or low interest rates, and now the stock market is going to start to protest against these very high rates, and of course it is a bubble. So therefore, I think, and I show that often between the Dow and gold, for example, it's a similar type of spread chart. Yes, interest rates are going to continue up, and stocks are going to react soon. I think normally the fall in stocks starts in the autumn, could start now, but I think it's more likely in the autumn. I think gold could go up before stocks. Gold could go up before, but stocks will crash probably, famous September, October period. And that's going to be a major downturn of stocks. And of course, we have, like in 2000, all the AI stocks, which are massively overvalued. And it's a bubble of enormous proportions. And that bubble is going to burst too. I'm not saying that AI is going to burst. I'm saying that the valuation of the stocks and the debt involved in building these incredible warehouses around, especially the US, will never be repaid because it doesn't actually. AI is not that profitable, and no one, I think, is going to pay those costs. Therefore, a lot of these companies will go bust. So yeah, it's clear, Jan, that the stock market is on the verge of coming down, and interest rates will just continue, and we will have very high inflation and very tough times.
We only need the needle to pop this bubble, Egon, and there is a very recent development relating to the Iran crisis, and that could cause this bubble to burst. I mean, the threatening of the Houthis to blockade Saudi Arabia, and we know that while the oil price was coming down also through manipulation, this memorandum of understanding that is now finished. During that period, a couple of weeks, the Saudis, of course, exported a lot of oil through the Red Sea, and now the Houthis that are in Yemen threaten the Saudis not to let their tankers out. And that would be the worst outcome that could happen to us. And I think this is going to happen if the powers to be want this. And what could that cause? Another 7-8 million barrel a day would be missing from the global market. We would see skyrocketing oil prices. In my opinion, the oil price right now at roughly $90 or so for Brent is really a gift. And I think this could really pop this bubble market and also trigger a collapse in bonds and cause this movement that we just saw, Egon, a sharp increase in the yields. What do you think? I think this could be a possible needle, really.
Absolutely, absolutely. Energy is everything, Jan, but just go back one step. The US has been involved in so many wars since World War II, and the US has lost every single one of these wars. We have to remember that. Still, it continues to interfere. I am quite certain that the US will lose the war against Iran, already is losing it. And as a matter of fact, I hear actually that Iran is contemplating invading some of the Gulf states. And of course, the US could do nothing about that because they don't have troops to send, and Iran has a massive army. So that would escalate it further. And of course, also, according to my sources, against Ukraine and Russia war, which the US is indirectly totally involved in, there's US is losing, or the West is losing, and Russia is gaining ground all the time. Although the propaganda we read in the West is that Ukraine is winning and they're bombing a lot of places in Russia, etc. But that's very, very small compared to the main war. So that's sadly that will continue, and the situation in the Middle East will lead to much, much higher oil prices. Yeah, and we haven't seen the effect yet because there's a delaying effect since they closed the Strait of Hormuz. Of course, these tankers move at about 4 knots across the ocean, and so it takes 2 months or more to go from the Middle East to the US, for example. Or to Asia. So, and of course, a lot of countries have been using their oil reserves. So we haven't seen the price effect yet of this oil shortage that the world has. because of a delay, but that delay is coming to an end. And it's not, the shortages will continue. The war is not finished, and this is going to continue. And therefore, we will see the oil price shooting up well over $100, or maybe, probably $200 or more over the next few months, in my view. And that's going to mean, because the world economy is all about energy, and energy is primarily all about oil and fossil fuels. There's no alternative to that. So these oil shortages that are going to develop, they are here already, but we haven't seen it in the market price yet. They are going to lead to a real recession, and most probably a depression in the world, and especially in the West. There is nothing to stop that, Jan. And so that's what we have. The world is still living in the bubble, and this is again why stock market is going to fall, because nobody understands what's happening. Nobody understands that this is for real, and I said energy is the key to this, and there is not enough energy to keep the world moving with these things happening. Serious matters here, Jan.
Absolutely true, Egon. I think the market is not correctly pricing the risk into the oil price, not at all. And I think once the oil price picks up, then the whole energy costs will eat through the value chain and will cause, as you said it already, Egon, a massive increase in inflation. So we really have to prepare for the worst. And one of the recent headlines was the diesel crisis. Ukraine and Russia are destroying each other's energy infrastructure. And this is, of course, missing in the world market, wherever it would be delivered to China or India. So China feels also threatened. It's simply not enough energy there. They destroy the infrastructure. So it's only a question of time until the prices will increase massively. And with it, the prices of everything else, because anything else to manufacture needs energy, more or less.
Yes, and this increase in oil prices, obviously, and therefore also the increase, as we discussed, in interest rates, will hit a world which is so indebted already, and a world that in no way will be able to service the interest on its debt. And this is why, we will most likely see a collapse of credit markets and of bond markets in the coming months and years, with absolutely horrible consequences for the world.
Then we will see, Egon, how scarce gold really is. Let's come to gold, because people were asking, and we have discussed this already, this correction, it's really long and painful. Okay, we didn't expect it to last that long, but there is an interesting hint. The strong buyers in the world continue to buy, or at least they plan to continue to buy, the central banks, and I think they have a good nose. Let me show this Kitco article. It's not brand new, but it shows where the trend goes. The WGC 2026 Central Bank Gold Reserve Survey, okay, this is from June, showed that 89% of reserve managers expect global central bank gold holdings to increase over the next 12 months, while a record of 45%, we see it here and the previous years, expect their own institutions to add to their reserves. We discussed that already, Egon. There was some central banks selling, for instance, Russia selling a bit, Turkey selling a bit early this year, but then buying again. Maybe this caused some pressure to the markets, also retail selling, whatever. China is buying big, selling the dollars they get in from their trade surplus, of course. And this is the train you have to be on. I'm absolutely convinced that we will see the big next leg up, whatever the retail does.
Yes, Jan, and of course we're not talking about here a speculative investment, and we're not talking about buying and selling as it was a normal commodity or stock. We're talking about here wealth preservation and therefore long-term security for investors. And I see stock markets and bond markets, but especially stock markets, going down by massive percentages against gold in the coming years. So I could see stock markets going down by as much as 75 to 95% against gold. That really only takes it back to the 1-to-1 ratio that we saw in 1980 between gold and the Dow. So that's not a dramatic fall at all. And since the bubble is greater now than it was in 1980, much greater, because there wasn't a real bubble then. Therefore, I think we're definitely going to see that 75 to 95. I think it's probably going to be nearer 95 than 75. 95% fall of stocks against gold. And that means a total destruction of wealth for most investors, because most investors are into stocks, not into gold. But we're obviously therefore also going to see a shift, people selling stocks and buying gold, but they're going to be slow and they're going to lose out. And most people, as I said, will lose a major part of their assets in the coming years here. And it's not just stocks, it's bonds also. So most people are not prepared, and that's why we have for years, Jan, begged investors to buy physical gold for their own protection of their own wealth and their families, etc. Now is still the time. Gold is very cheap in relation to stocks. So get out of stocks, get out of bonds, get out of bubble assets, and buy precious metals, physical. Keep it outside the banking system in safe jurisdictions. That's what people should do. And the timing is fantastic. And we have seen a correction. So if you buy now, then you are absolutely going to not just preserve your wealth, but you're going to make a lot of money on top of that. But that's not the main purpose. So yes, please think about the fact that you are not going to maintain your wealth or your standard of living or your assets if you stick to stocks in the next few years.
Absolutely true, Egon. We are like Cassandras, and most people are never prepared. That's always the same. There's a German saying, speak like a book. It's always against the wall, but at least we reach some people. A final word about silver, because there was the correction, or still there is the correction, very hefty. It lost half from the peak in January, now roughly $60. I found two interesting graphics, one from Tavi Costa and another one from Alistair MacLeod, and this clearly speaks for silver. Here the first one, solar overtakes gas power in Asia, and solar, the installed solar power, solar panels, they of course need silver. And we had for a while a phase where the solar producers, the panel producers, thought about replacing silver, but now it's cheap again for them. So I think this threat is gone for a while. And then China. We mentioned China already. They are importing like crazy. What does this tell us? We see here the previous years, another article from your Substack, and this is the current year. China knows where the value lies, right? So we should.
Jan, when you say that silver halved since early February and gold came down substantially, you have to remember that both gold and silver are at twice the price that they were 2 years ago. So at these lower price, much lower prices than we saw in January, both gold and silver have doubled in the last 2 years, and obviously also gone up much more since before that. But so therefore, although it looks like a big correction, it isn't that big because the rise was substantial. And now we're back in a position again when both gold and especially silver are going to catapult and go up by massive percentages. You can see silver again moving up by tens of dollars in a matter of days or shorter, and gold by hundreds of dollars. So that's what we're likely to see. And again, don't wait for the price to go over $5,000 or silver to go over $100 because it's going to happen. So don't wait for it because you're going to lose out the massive opportunity to buy it at a much lower price. So we know it's not for our sake we're asking you for, it's for your sake, to protect your wealth. This is again a fantastic opportunity. Take advantage of it.
Absolutely, Egon. That was the final statement. And I'd like to stress to our audience, your preparations should include also other means, not just precious metals for your financial well-being, also many other things that could become unaffordable, unaccessible, unavailable in the months ahead. Very important.
Now, it's a unique situation in the world here. The number one, the wars we talked about, they could escalate. So that's in itself a very, very dangerous, potentially very dangerous times ahead. So therefore, again, your investments you should protect because of that. But then, what then in markets, this is one in 100 years time of event that we're likely to see in markets now. And it can happen quickly or it could take a few years. It doesn't. I don't think it'll take a few years, take a few months, maybe maximum, before it starts. So please prepare. That's because the time is here and now. And if you're not prepared, you're going to suffer.
Exactly, Egon. Thank you for today. Get your house in order. I wish you a good rest of the summer in Sweden, and then we talk next month. Thank you. Auf Wiedersehen.
Thank you, Jan. Thank you. Good to talk to you.
Thank you. Bye-bye.
Bye.